Where does still look good? We'll get into some of the reasons for these outflows in a second, but where is the danger overstated, would you say?
Well, we don't know how big the storm is and when it will blow out. I think the danger is several-fold in the sense that there'll be injured innocents in the process. Perhaps also whether the institutional investors are going to capitulate. They tend to be the longer-term investors. So we have to wait and see.
We talk about financial woes, financial vulnerability. For things to be long-lasting, for investors really to be scared of, does that need to go hand in hand with political risk?
Yes, absolutely. I think you can see countries where you have got financial vulnerability, but the politics is steady. The Baltics, for example, and they continue to perform well. On the other hand, you've got countries like Thailand with political risk, but the economics and finances are quite healthy. And so that's the support. I think the danger is, the toxic danger and the longevity of the crisis will be for those countries that have a combination of clear financial vulnerability, but also political risk.
All right, let's look at some individuals. Turkey, it's got a huge current account deficit. Clearly there's political risk there. Do you stay well away from Turkey for now?
Well, I think so. There's the policy in the middle as well. I mean, they've jacked up interest rates belatedly, and that's the other thing we have to look at. But clearly they have this current account deficit. They need to cool growth to start closing that. That's got to be seen to be done before, investors can be reassured. So they've got a large current account deficit. It's not well covered by foreign direct investment, which is a long-term capital inflow that helps cover or finance this current account deficit. And a lot of their financing has been dependent on portfolio flows, hot money, that tends to fly in and fly out. And you make yourself vulnerable if you're dependent on these kinds of flows.